Hello guys, welcome back to my channel where crypto is made simple. In this channel, we only look on the pure facts in the chart. We stay away from the noise, stay level-headed and calm. And what I also help you do is stay ahead of the curve. If you like what I'm sharing with you guys, don't forget to like, share and subscribe to my channel. Let's jump in. And as usual, we're going to start on the monthly time frame. And what you have in front of you is the 21-month moving average. And as you can see, we haven't confirmed it as support yet. We've been battling for a couple of months, and we're going to use the stochastic RSI, the momentum of the market, for a clearer picture. In 2016, after a long extended bear market and a double bottom, we rallied into phase one of the bull run and spent a couple of months above this yellow line, which became a market structure, a new market structure. At the same time, the stochastic RSI was way above the 80 level and also staying above the 80 level, which kept us for a couple of months, then broke above this level of resistance and stayed for a couple of months in an uptrend. As you can see, in 2019 we had our phase one rally, couple of months consolidating sideways, but 2019 was more than a year of consolidation. Plus the stochastic RSI crossed above the 80 but failed to stay above, crossed back down, which led us into a downfall. Currently in 2023, we rallied above the 80 level just like previous market cycles. In 2023, we also had our phase 1 rally, couple of months sideways as we spoke in Q2 and Q3 consolidation phase. We recently crossed above the 80 level. What we want to see is the stochastic RSI staying above the 80 level just like 2016. If we don't, we're going to behave like 2019. I'll cover some details in a bit on what to watch to stay ahead of the curve. Let's jump into the next chart. And what we have over here is the RCI lines and the TDIGM, which I also spoke about in previous videos on the monthly time frame, and we spoke about the two scenarios regarding the RCI. Once we cross above the green line in phase 1 rally and stay above the green line, we're going to spend some months of sideways action, then break resistance and start making higher highs like shown in 2016. While in 2019, when we crossed above the green line after phase 1 rally and crossed back down below the green line, it spelled a longer downtrend and more time of consolidation before breaking levels of resistance. Currently in 2023, we broke above the green line after phase 1 rally. We had our couple of months consolidation, but what seems to be happening, you can see that the red line is crossing back below. What we want to watch by the end of this month at the monthly close, we want to see the red line stay above the green line and not crossing below the green line. If you cross below, you already know we're going to behave like 2019 over here. We'll give an update hopefully by the end of the month. Also, what we have on the TDIGM, Traders Dynamic Index, in 2016, when the red line crossed above the green line, we rallied into the orange line in phase 1 rally and stayed above the green line for the whole market cycle. But in 2019, we rallied into the orange line, consolidated for a couple of months, but ended up breaking below the green line one more time, which spelled, like I said, long extended downtrend before higher price action. What we seem to be having here in 2023, the red line has came down back to the green line and we're currently battling with the green line. We'll also watch for confluence by the end of the month. What we want to see is a confirmation above the green line, holding it as support. Also, we don't want to see the red line crossing back below the green line, or else we're going to have something similar to 2019 and you might fall down back in prices in the near future. We'll discuss about some targets and what to watch in a second. So we're now on the weekly time frame, and on the weekly time frame I'm going to jump back in date to 2012. Even in 2012, after phase 1 rally, we came back down and held market structure. The yellow line over here became our base or our market structure, and it flipped as support. Like you guys know, all markets are based on support and resistance. In 2016, we also did the same thing. We rallied into phase 1, came back down to this market structure confirmed as support. In 2019, phase 1 rally came back down to market structure. Unfortunately, in 2019, we broke below the market structure momentarily, but rallied back up and confirmed support. As you can see, we also had a big wick to the downside. Currently, the good thing in 2019 so far, with the recent shakeout, the same thing happened. We fell down back in prices. Where did we fall to? to our base. So what we want to look for is prices staying above this yellow line, confirm it as support and becoming our new base just like previous cycle. We will discuss about the possibilities and probabilities whether we're going to hold this as support or are we going to act like 2019. Let's jump to other charts and also talk about some targets we need to watch in the near future. And what we have over here is our golden cross and death cross on the weekly time frame. We have our most critical moving average, the 200-week moving average. Despite we're below, a good sign. We're still above. We're still holding market structure as support at the moment, like we said in previous chart, at the 25k level. The other good thing, the stochastic RSI, the momentum of the market is in oversold territory, which we should expect a cross back over in the near future. We'll have to watch how it plays out. And our super weapon indicator, the NVT HV, network value transaction and historic volatility. We crossed back above the yellow line recently and we're still in red, which is bullish. We'll be watching the NVT and the stochastic RSI by the end of this week, by Sunday midnight, to see whether it's still on red or it flips white. If it flips white, it's bearish. If it stays in red, it's bullish. We've covered the good scenario, and I'm also going to cover the bad scenario and what to expect if it happens. Like you guys know, I always like staying ahead of the curve. Let's jump into the next chart, and it all boils down to two things. A price target we're going to talk about now, and I will leave you with a clear picture in mind on what to do in case any of those two scenarios plays out. And what we have over here is our pi cycle bottom indicator, and we're going to compare each cycles and how they reacted, and we're going to go back in time to 2012. Whenever we break above the green line and we fail to hold as support and we break below the green line, our next level is the red line. In 2015 we had our market bottom, our double bottom, phase 1 rally. In phase 1 rally we stayed above the green line as support. As you can realize, we never broke below the green line for the whole cycle in 2016. In 2019, the same thing, market bottom, phase 1 rally. Prices failed to hold as support on the green line. Once we broke below the green line, we rallied back, failed to hold as support, which was confirmed as resistance. And the next thing happened, we went back down to the red line one more time, and we also wicked below. Currently, what Bitcoin did is we had our double bottom, phase 1 rally, couple of months of consolidation, sideways action. Recently, after this recent shakeout, we broke below the green line, which is a little bit of a warning sign of what to come ahead. You can see we broke below in this candle. What we want to watch for by the end of this week, by Sunday 11:59 p.m., is for Bitcoin to rally back above the green line and confirm as support. If we fail to hold support on the green line, it's going to spell some downside in the near future. Like I always said, you always want to watch for a breakout or a breakdown, and also wait for a confirmation candle. So this is a breakdown candle. We're watching this weekly candle, how it's going to play out for confirmation. And like I said, anytime we fail below the green line and we fail to hold support, the next thing is we come down and touch our red line. Where is the current price of the red line at the moment? It's around 17.5k. We'll watch in the near future how it plays out. I've already given you some clues on what to watch, the good case and the bad case, and how to be prepared for both scenarios. Simply, if we rally back above the green line and hold as support, we continue our bull run like 2015, where we break above previous resistance and start making higher highs. If we fail to confirm as support, we're going to act similar to 2019 with a long extended downtrend, bringing us to the red line. And don't forget, we can also wick below the red line, it's fine, but we want to close above the red line. If you like what I'm sharing with you guys, don't forget to like, share, and also subscribe to get notified whenever I do an update on these two scenarios. Hopefully by next week we'll make a major update. See you on the next one.